Amazon helped lift U.S. stocks back up again on Friday after reporting profit in the holiday quarter that beat expectations, giving investors something to cheer at the end of a volatile trading week. The e-commerce giant also surprised investors by breaking out advertising as a separate business for the first time and said it was raising the price of its U.S. Prime subscriptions. Shares rose more than 13% by midday Friday in what would be the stock's biggest one-day percentage gain since October 2017. For the holiday quarter, Amazon earned $14 billion, double its net income from a year earlier. Its key cloud unit, Amazon Web Services, performed better than expected, posting a 40% increase in revenue as demand rose for gaming and remote work during the pandemic. On the heels of a windfall from more at-home shopping, Amazon has poured money into its operations to manage disruptions, most recently the Omicron variant. Amazon has also marketed signing bonuses to attract hundreds of thousands of workers in a tight labor market and has paid more for shipping. But hiking the price of Prime for Amazon's more than 200 million paid subscribers looked like a way to offset those higher costs, a move analysts had expected. Annual memberships will go up to $139 from $119 this month. Breaking out its advertising business may have been the biggest treat for analysts and investors, who used to have to guess its size, and they liked what they saw. Ad revenue jumped 32% to $9.7 billion. That's bigger than the ad sales Google parent Alphabet reported for YouTube in the same quarter. Amazon also said its ad business was, quote, largely unchanged after Apple's privacy tweaks to its operating system. Those same changes made it more difficult for brands to target ads on Instagram and Facebook, which led to Meta Platforms' dire forecast that tanked the tech sector on Thursday and knocked shares of Meta down 26%.
Our country is taking everything that COVID has to throw at us, and we've come back stronger. I'm pleased to report this morning, but many of you already know, that America's job machine is going stronger than ever, fueling a strong recovery and opportunity for hardworking women and men all across this great country. America is back to work. Today, we learned that in January, our economy created 467,000 jobs. But that's not all. We learned that job growth in November and December over last year was revised up by more than 700,000 jobs. On top of that, 400,000 jobs on top of the 400,000 that were previously reported. This morning's report caps off my first year as president. And over that period, our economy created 6.6 million jobs. 6.6 million jobs. You can't remember another year when so many people went to work in this country. There's a reason. It never happened. Take a look at the chart. You can look at the last, all the way back to President Reagan. Look how many jobs we've created in an average per month. This is, it's never happened before. And look, history's been made here. But it comes alongside the largest drop in unemployment rate in a single year on record. The largest reduction in childhood poverty ever recorded in a single year. And the strongest economic growth this country has seen in nearly 40 years.
Wall Street avoided further metastasis on Friday, recovering after Facebook owner Meta Platforms sank U.S. stocks the day before, as Amazon's strong earnings boosted sentiment after a mixed week of big tech earnings. The Dow finished flat and the S&P closed up 0.5%, while the Nasdaq gained more than 1.5%, ending the volatile week higher after Thursday's rout. Kevin Nicholson, chief investment officer at Riverfront Investment Group, said the real reason for Friday's rebound was the jobs report, which showed job growth that was much higher than economists had expected.
The stock market is reacting to the jobs report that we had this morning, which was very strong. We added almost 500,000 new jobs. So we've had the equity markets really react off of this, saying that because we have such a strong jobs market, that we will go higher because a lot of the bottlenecks that we had experienced earlier in the year will start to go away as more companies are hiring out there.
Amazon finished Friday's session up 13.5% after reporting profit in the holiday quarter that beat expectations, It also delighted investors by hiking its Prime subscription rate and breaking out its ad business for the first time. A day after Meta dragged down all social media stocks, Snap soared on Friday, closing up a whopping 59% after reporting better-than-expected fourth-quarter user growth and a positive outlook. Pinterest rose 11% after its quarterly revenue beat estimates as retailers splurged on advertising during the holidays. And Twitter rose 7% ahead of posting its results, which are expected on February 10th. In the red on Friday was Meta again, though the bleeding appeared to be staunched, with shares finishing about flat. Clorox went from hot wash to cold rinse, closing down 14.5% after reporting a big drop in revenue in the last quarter, and said rising costs will eat into profit for years to come. And shares of Ford Motor Company hit the skids, closing down nearly 10%, after the automaker posted disappointing quarterly numbers and forecast a slower recovery for this year's vehicle production than rival General Motors.
Belgium's national dish is about to get pricier. The fried potatoes sold from trucks and kiosks across the country are the latest victim of rising energy and raw material prices. Inflation in Belgium was 6.6% year-on-year in December. The president of the National Union of Fries Makers, Bernard Lefebvre, represents some 4,600 businesses. He said they're not immune to the national picture.
Fries being such an important product for Belgium, of course, emotionally, when you have an increase of 10 or 20 cents a portion, it's heartbreaking. Frying machines have improved a lot in efficiency the last years. But yes, you can't fry fries with a candle.
The boss of this fries stand says customers will understand because prices haven't changed in a long time. The 10% price hike is expected to add 20 cents to the cost of a typical portion, all thanks to pricier fat, potatoes and energy.
Sanofi expects its COVID-19 vaccine to complete Phase 3 trials in the first quarter. The French drug maker made the announcement Friday. Sanofi was one of the biggest makers of vaccines in the world by sales before the health crisis, but the group fell behind in the jab race as rivals used newer mRNA technology. Sanofi has focused on efforts to work with British partner GlaxoSmithKline to develop a vaccine based on a more conventional protein-based approach. Mass trials are ongoing. The firm had first targeted approval in the first half of 2021, but later pushed that back. Sanofi also gave its fourth quarter results Friday. It said sales in the 3 months to December grew a touch over 4% to $11.45 billion. Looking further ahead, Sanofi said it was aiming for an increase in its earnings per share in the low double digits in 2022.